What's going on, guys? Welcome to my YouTube channel and welcome to this video on the euro. If you'd like to learn how to enter markets when they are high, to cover when they are low, meaning shorting up here and exiting down here, then watch this video all the way through as I explain how I was able to do that on Friday, April 26th, 2024. So what this is a cropped screenshot of the euro. I think it's on a 5-minute time frame, just to be able to show you that I did not take drawdown from this initial movement here that I entered on the candle right after that. Actually, this might be a 1-minute time frame now that I think about it, but either way, what we're going to do is hop over into trading view so I can show you the full analysis. We can zoom into the chart, we can talk about some things and go from there. And then again, I'll explain how I was able to exit this market very close to the low of the day before the market traded back into the range. All right, so the first thing we need to do is our top-down analysis, usually monthly, weekly, daily, all the way down. However, we're just going to keep it to the daily time frame for today. So again, Friday, April 26th, that was the trading day. That was actually yesterday. I'm recording this on a Saturday. So as price, right, we close on Thursday, we open Friday, and we trade higher initially, especially during London. So when we talk about how far the markets can trade higher, let's say above previous day's high, that's important. Not just the previous day's high, but also how far price can trade above that. Now, usually we talk about imbalances, in which we do have one up here. Now, price didn't reach that far, but it did trade into something important. If we take a look at this price action in here, it's not the greatest in the world as far as what's actually happening in here, but it's the matter of this low here. And I'm talking about the body, right? So this candle has an open, high, low, close, and I'm interested in this particular candle, more specifically the body. So I am looking at, again, the close 107.428, and then possibly the open as well, but the market doesn't have to reach that high. So that level ends up being above Thursday's high. So this information is going to be important when we go down into the smaller time frames. So I'm going to label this real quick, and then we'll go down into the smaller time frames. All right, so we drop down to a 15-minute time frame. And again, I labeled that daily mitigation candle, that closing price on the daily, and then the previous day's high. Since this was Friday, I'm labeling Thursday's high. So London opens and we actually trade down first, but then we launch higher. So again, this information is very, very important because we need to understand if the high of the day has been set or not. And we, or at least when I took this trade, I had the understanding that the high of the day has likely been set. It should not trade above this high. This is a fractal high, whether this is a 3-bar pattern or a 5-bar pattern. This is a fractal high on Friday above Thursday's high. That's important. The market slams down. We do see a break of structure, whether you're looking at this low or that low. We break below both of them. Now at 7:30 Central Time, so this would be 8:30 a.m. EST if you're looking at that. When the market trades off of this manipulation here, there are 2 highs right here inside this blue circle that are very important. Those are short-term highs. If the market is going to trade lower, it is likely going to sweep these highs. Now, it doesn't always sweep both. Sometimes it sweeps just one, but it was the euro. Wasn't really a large range in here, and we saw that again, volatility at 7:30. So we trade up and we trade into very specific price levels. Again, this short-term high here, as well as this short-term high here. And then we also happened to reach into the previous day's high. So anybody who was short from up here, great. But if they trailed their stop, they got knocked out. So as the candle is trading off of it, and this was on like a 1/5 minute time frame, it was as price was coming off of it is when I entered at I think it was 7:31 on a 1 minute time frame. So you can see how fast this was. The 7:31, so it was 1 minute after the news. This is where I entered. And just like I showed you in the screenshot, so it's this candle right here, because I'm entering after the stop run. Okay, post manipulation is when I'm entering. Usually it's best to enter above the highs if you think the market's going lower, but this market was moving fast. I didn't plan on that, so I just waited for the manipulation and then got in after that. Okay, now what makes me want to be bearish in the first place? Because that's the idea, right? Where is the market going? It needs something to trade to, and usually for me this is going to present itself in the form of liquidity. So I'm looking for, let's say if I'm bearish, okay, there's got to be equal lows, low resistant lows, previous day low, previous week low, things of that nature. And so when you're looking at the chart like this, and price is here and, you know, gyrating up and down, then you have to determine, okay, well, is it more likely to go above this high or below these lows down here? Now the dollar index, I'm not going to get into that in this video, but the dollar index did play a big part in that. There was a mitigation on the 15-minute time frame, the function of a mitigation. Okay, and so a potentially bullish dollar can lead to a potentially bearish euro. So all the signatures were there. We had manipulation above previous day's high. We had a higher time frame concept in here. Remember the mitigation candle on the daily time frame, that range is large. It's about 40 pips or so, but it doesn't have to trade, you know, all through that. I can trade just a little bit into it like we do see here, and that's fine. So we get that breakdown, short-term manipulation, and then once the market does that, it usually has the green light to trade lower. Okay, once liquidity has been taken, it has no reason to come back up here. Once liquidity has been taken here, it has almost no reason to go back up there again. And once that occurs, we have such a lopsided market where you see stuff like this, where it prints all these down candles on this 15-minute time frame. How many is that? 3, 6, 9, 10 or 11 down candles straight to the downside. So then what made me exit down in here? Because remember, I exited very close to the low of the day as well. Now you know why. It's these lows, Wednesday's low as well as Thursday's low. So Thursday's low is very important because on Friday, Thursday's low is the previous day low, and with Wednesday and Thursday's lows, that makes equal lows. So it makes this level here to me like doubly important. All right, so then with that, that's why I'm exiting. It could have continued to go lower, but I wasn't trying to pick the low of the day. I was just trying to, well, make money. Okay, so I wanted to bank something, and this was actually the later partial. I did partial, I think like 30 or 35 pips on the way lower, just to bank something, and then the last partial was down here. All right, so with that being said, hopefully you guys learned something in this video. If you did, drop a like, leave me a comment, let me know what you think. And if you really enjoy my content, come hang out with us in the Discord. You can become a member today. It's only 25 bucks a month. You can hit the join button under any of the videos, and you'll have access to a lot of the videos that are members only. So if that interests you, check that out, and I will see you in the next video.